S&P Dow Jones Indices launched the S&P 500 ESG Index in 2019. 5 years on from launch, how has it performed relative to its objectives? Hello, I'm Jaspreet Duhra of S&P DGI, and joining me today to reflect on the first 5 years of the S&P 500 ESG Index and what may be driving index performance are Sherifa Issifu and Beyhan of S&P DGI. Thank you both for joining me today.
Thank you for having me.
Pleasure to be here. Thank you, Jess.
Sherifa, let's start with you. So can we start with a little bit of background on the S&P 500 ESG Index? Can you talk us through its objectives and some of its characteristics, please?
Happy to, Jazz. The S&P 500 ESG Index provides an ESG scores and screens focused view of the S&P 500. The index begins with all companies in the S&P 500. The S&P 500 ESG Index then excludes companies in thermal coal, tobacco, controversial weapons, and other exclusions as specific thresholds. The S&P 500 ESG Index targets 75% of the S&P 500's market capitalization in GICS, Global Industry Classification Standard industry groups, by S&P Global ESG scores. These scores provide a data-driven and advanced technology approach to looking at ESG. They look at financial materiality and financial signals in ESG within specific industries. With the US making up 62% of the global equity market at the end of June 2024, market participants who have strong views on sustainability can integrate their views into the largest equity market in the world via the S&P 500 ESG Index.
Thanks, Sherifa, for that really clear overview. Can you talk to us a bit about the index's performance?
The index's fifth birthday provides an opportunity to look at the performance. The S&P 500 ESG Index outperformed the S&P 500 over 1, 3, and 5 years, providing similar levels of risk and return, similar levels of volatility, and a low tracking error of 1% annualized since inception. Often, one of the criticisms of ESG is that the outperformance or differences in returns are often achieved through specific sector under or overweights. But what we've actually seen historically is that the differences in performance, outperformance, or underperformance are actually more driven by stock selection than sector allocation. This is unsurprising because when we look at the methodology of the S&P 500 ESG Index, it is aimed at being more sector neutral and providing similar weights in industry groups to the S&P 500.
That's great. Thank you very much. And Maya, you've done some really interesting analysis on what's driving this outperformance. Could you give us some of those insights, please?
Absolutely. Thank you, Jess. I think we should look at the importance of high and low ESG scoring companies in generating this excess return. To measure this, we created hypothetical ESG quantiles by ranking the ESG scores of the S&P 500 constituents and assigning each to one of 5 portfolios from highest to lowest. We then calculated the hypothetical cap-weighted performance by using a Brinson-like ESG attribution, teasing out the importance of ESG exposures in the returns in the S&P 500 ESG Index. Let's take a look at the exhibit on screen. Comparing the return performance of the highest ESG quantile and the low ESG quantile to the S&P 500 in the past 5 years. The high ESG quantile outperformed the S&P 500 in the 4 of the 5 calendar years represented, achieving a cumulative outperformance of 30%, which is phenomenal. On the other hand, the lowest ESG quantile underperformed the S&P 500 in the 3 of the 5 calendar years represented. Cumulatively, achieving an underperformance of 7%. This shows, in short, that the S&P 500 ESG Index likely consistently benefited from avoiding the worst ESG scoring and seeking the best ESG scoring constituents. Next, let's change the gear a little bit and take a closer look at the respective ESG scores of the S&P 500 ESG Index and the S&P 500 and how this changed in the past 5 years. Since its inception, the S&P 500 ESG Index achieved an ESG score improvement of 4.5 against the S&P 500. During this period, its ESG score increased by 1.1. Main drivers behind this increase was index additions, deletions like divestments, but also changes in the weights of the constituents, from which the largest impact came, an ESG score increase of 3.2. This finding is in line with this index's construction methodology to rank and weigh the constituents based on their ESG scores.
Great, really fascinating. Thank you, Maya.
Pleasure.
And Sherifa, finally to you, can you talk to us a little bit about the trading ecosystem and the liquidity around the S&P 500 ESG Index?
Of course. When looking at the trading ecosystem of traditional benchmarks like the S&P 500, the S&P 500 ESG Index is newer but rapidly growing. The S&P 500 ESG Index is one of the most notable sustainability indices when looking at its tradability and ecosystem. This puts it in a position of being quite a notable and important index when looking at sustainability in US equities. When we look at the trading in the S&P 500 ESG Index, looking at the traded value or the notional value in dollars of the S&P 500 ESG Index, we see that in the 4 trailing quarters, this is 4 times the amount of traded assets. A large part of this has also been driven by the futures as well. When looking at market liquidity, exchange-traded derivatives or ETDs, such as futures and options, provide a notable and important part of market liquidity and depth.
That's a fascinating oversight. Thank you very much, Sherifa. Thank you, Maya. To learn more about sustainability indices and the S&P 500 ESG Index, please visit us at the link below.